Welcome back everyone, and in this video, we're going to discuss 4 stocks that analysts expect will benefit from the next stimulus deal, the reopening of the economy, and the warmer weather over the next few months. These 4 companies operate in sectors that were impacted by the pandemic, and now with vaccines getting distributed all across the country, and hopefully the pandemic coming to an end very soon, these 4 stocks are expected to see some strong growth going forward. And with the extreme volatility that we've been seeing in the market as of late, you may be able to buy into these companies at some very good prices. And before we jump into the first stock, as always, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy in any major market news. So please hit that like button and subscribe for the daily videos. And we're going to jump straight in to company number 1, which is National Vision Holdings. Ticker EYE or I. They trade for $46 per share, and over the past 12 months, the company has grown by over 33%. They have a current market cap at $3.74 billion, and the company operates over 1,200 retail locations across 44 different states under 5 different retail brands. So they are nicely diversified across the country and are one of the leaders in the vision retail space. And as more states reduce pandemic restrictions and in-person retail can operate at a greater capacity, I think the demand for their products is going to surge. Now with warmer weather, consumers are going to feel the need to go out, and it's very hard to purchase eyeglasses online throughout this pandemic. So many consumers were just waiting for the pandemic to come to an end before upgrading their current eyewear. And I think now that these retail locations are going to be opening all across the country, they're going to expand their network. This is a brand that's going to do very well over the next few years. And they actually closed out 2020 with a great fourth quarter. They beat on revenue and earnings expectations. And if we take a look at the actual investor presentation, they generated $496 million of revenue in the fourth quarter, which was a 23% increase over the 2019 number. And taking a look at their EPS, that hit 45 cents per share, representing a 372% increase over the 9 cents back in 2019. And for the 2021 fiscal year, the company is expecting to open around 75 more stores and have revenue between $1.9 and $2 billion, representing between 13 and 16% growth over the 2020 number. And if we take a look at their income statement, they've done a great job of expanding and growing revenue year over year, and an only minimal decrease over the 2020 number, even throughout the global pandemic, where they were forced to shut down a ton of their stores for months at a time. And if we take a look at their net income, this company has been profitable over the past 5 years, averaging between $30 and $40 million of income. And at this current level, analysts are still projecting another 15% growth over the next 12 months with an average price target of $53 per share. And at this current level, the company is considered a buy, 5 strong buys, 5 buys, and 3 holds, and no one is selling out of ticker I. And we can see over the past 6 quarters, they have crushed analyst expectations each and every time, which is a very strong sign. And their total revenue is projected to grow by 14.5% in 2021 and 25% total growth by year-end 2022. And jumping over to Yahoo Finance, for the next 5 years, they're projected to grow at over 12% per year, and they are currently considered a strong buy with a 1.8 rating. And overall, National Vision Holdings, or ticker I, is one of the companies that is projected to benefit from a new stimulus package, the reopening of the economy, and warmer weather coming over the next few months. So definitely do some research into this name, and they are one of the top analyst stocks to buy right now. And now moving on to company number 2, we're going to take a look at Lowe's. Ticker LOW, currently trading for $168, and over the past year, the company has grown by over 76%. And they have a current market cap of $120 billion and are trading with a forward PE of 17.24. And this is a dividend king. They have a current yield of 1.45%. And throughout 2020, Lowe's actually performed very well. With consumers being forced to spend more time indoors, they were actually spending the money to improve their living conditions, and that's where Lowe's benefits. And going forward into 2021, they're expected to still see a massive trend in DIY home improvement projects, and they actually got an upgrade in their price target from analysts to $202 per share, well above the current level that we're sitting at right now. And if we examine the company's income statement, we can see year over year, total revenue continues to climb higher with a massive spike over the trailing 12 months, from 72 billion of total revenue up to over 89.5 billion is absolutely insane. And we can see their total net income also saw a massive jump with record high profits of 5.8 billion over the past 12 months, which is absolutely spectacular. And this is a dividend king that's been operational for decades and has a current yield at 1.45%. Their payout ratio is extremely tiny, making up only 25% of their net income, and they still have a very nice dividend growth average of 16.5% per year. So that lower starting yield is going to grow and compound at a very fast rate, and they are the definition of consistency, growing that dividend for 57 consecutive years. And with Lowe's, although the starting yield is on the smaller side, they also provide investors with great long-term share price appreciation of 134% over the past 5 years and over 500% over the past decade. And right now, going forward over the next 12 months, we are still expecting 18% share price growth, and the company is considered a buy. 11 strong buys, 14 buys, and 7 holds, and no one is selling out of Lowe's right now. And over the next 5 years, the company is projected to grow to close to 14% per year, and the current share price of $168 is well below the 12-month average expectation of 196, and they are currently rated as a strong buy with that 1.9 rating. And Lowe's is definitely a company that is poised to benefit from the next round of stimulus and the warmer weather over the next few months. And they have proven that through any hard time, any recession or depression, they can not only pay out their dividend, but also provide investors with that growing cash flow each and every year, and are definitely worth taking a look at this current point in time. And now moving on to stock number 3, we're going to take a look at ticker STZ or Constellation Brands. They're currently trading for $227 per share and are up 38% over the trailing 12 months. Right now, they have a current market cap at 43 billion and are trading with a forward PE of 23.3, and this is a dividend paying company with a yield of 1.32%. And if you're unaware of what Constellation's brand is, they are one of the leading names in the alcohol beverage sector and own the popular brands Corona and Modelo, as well as many other wine and spirit options. And Goldman Sachs believes that Constellation Brands will be the winner in the alcohol sector and have increased their price target to $275 per share and have added that more fast and profitable growth is to come over the next few years. And from their current level of $227, a lot of upside projected over the next 12 months. And jumping into the company's investor presentation, over the medium term, they're projecting between 7 and 9% annual growth coming from their beer products, which make up around 2/3 of their 2020 total sales. And over the next few years, the company has plans to return $5 billion of capital to their investors in the form of a dividend and share buybacks. And they have plans to maintain a payout ratio of 30% over the long term. And taking a look at their dividend scorecard, their current yield of 1.32% makes up 31% of their net income, which is a very strong and sustainable level. And now taking a look at their analyst report, the company is projected to grow by 11% over the next 12 months and is currently rated as a buy as well. 3 strong buys, 11 buys, and 7 holds. And once again, over the past 6 quarters, they have beat earnings expectations each and every time. And over the next 5 years, we're projecting 8% per year growth with a current buy rating on the company, and that share price sits well below the 12-month expectation. So I believe this is definitely a company that's going to benefit from the warmer weather. I think as people can go out to restaurants and bars once again, and large crowds can gather at events or concerts, the demand for alcohol in our economy is going to surge, and this brand is going to be one of the top players in that growing market. And now if we take a look at stock number 4 in this video, the last company that we're going to go over, it is Dollar General, ticker DG. They currently trade for $187 per share, and the company has a current market cap of $45.7 billion and are trading with a forward PE of 17.4. And at this current level, their dividend is very low at a 0.7% yield. And right now, the company is on a downtrend from their high point of $220 back in October of 2020. And now they sit down 15%, so maybe at an attractive level to start or add to an existing position. And if we take a look at their income statement, year over year, total revenue continues to expand at a very nice rate, and in the trailing 12 months, they've generated $32.5 billion of total revenue. And I think no matter what, consumers will always have a need for low-cost retailers, and Dollar Giant is one of the top names in that space. And right now, they generated $2.5 billion of profit over the past 12 months, and that is another metric that continues to grow year over year. And if we take a look at their long-term share price chart, over the past 5 years, they have grown 148%, and over the past decade, they have grown over 566% overall. So this is a company that returns a ton of capital to investors with regard to share price appreciation, plus a little bonus with that tiny dividend of 0.77%, and that only makes up 13.5% of their total net income. So that means the company has a lot of excess capital to reinvest and grow their business and also do share buybacks while continuing to grow their operations at a very nice rate. And also that low dividend payment is growing at a decent rate per year of over 16%. So I think Dollar General, no matter what's going to perform very well, and these companies thrive throughout pandemics or tough economic situations, which our economy is still going through right now. Although the market doesn't show it, our economy still has high unemployment, and millions of consumers all across the country are reliant on a company like Dollar General for their everyday essentials. And if we take a look at their analyst report, the company is projected to grow by over 27% over the next 12 months, and they are considered a buy with 8 strong buys, 14 buys, and 7 holds. And once again, no one is selling out of this company. They have crushed analyst expectations for EPS for 6 consecutive quarters, and in 2021, we have estimated revenue growth of over 21.2%. And for the next 5 years, analysts are expecting 17.3% annual share price appreciation, and this current level of 187 is well below the 12-month price target of $238, and the company is considered a buy at this current level. So definitely do some research into Dollar General, one of the top names in the low-cost retailer space that's been growing at a terrific rate over the long term and on a slight dip as of late, leading to a great buying opportunity with massive upside ahead. And now we're going to wrap up the video. Thank you for watching to the end. We discussed 4 companies that are expected to benefit from the next stimulus deal, the warmer weather, and the reopening of the economy. We took a look at ticker symbol I, Lowe's, Dollar General, and of course, Constellation Brands, 4 names in very different sectors that all have a ton of benefits over the next few years going forward. So let me know down in the comments what you think of these companies, if you already own them, if you plan to buy more, or your general thoughts and ideas on these companies and their future success. So thank you for watching. I am the Gen Z Investor. Please hit that like button and subscribe, and we'll see you in tomorrow's video.